Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. First notice date for the March contracts is next week, so we wanted to start off today a little bit differently and simply show you some support and resistance levels that are key heading into the end of the month. For March corn, we're looking at overhead resistance sitting at 382, and then we have right at the midpoint 372, and then downside support around 362.5. These three levels are going to be critical for this particular contract as we head into the close. March beans made a lower high right up against 1069. You can see very good resistance here, just shy of volatility-based resistance. The market then came through and broke through the next level at 1036 3/4. And in all likelihood, we're probably going to see somewhere close to 1,475 before this contract comes off the board. The third and final of the March contracts that we'll look at is the wheat. We like very much the way in which this market rallied up to 465.5, or at least just shy of that number, really coming into our price projection target and then reversing from there. We saw very good resistance at 454 3/4. The market rolled down to our 180-degree mark at 433 3/4. And today we see a bit of a bounce from that level. In the event that this contract is able to break below 433 3/4, it would not surprise us to see a test of 413. But in all likelihood, we will probably see the market hover in the neighborhood of 433 3/4 and possibly come in somewhere in the neighborhood of 425 in terms of a maximum drop. Moving forward onto our July contracts, we can see here that corn came up into resistance as anticipated, right up into our volatility-based resistance band, and the market basically stopped just shy of 394.5. As the market came up into this area, we see a nice bit of a drop down, and the market has potential to find support at about 375. In all likelihood, what we're looking at right now is for corn to potentially make a move that comes in and drops. Even if it were to move a little bit higher, we're believing right now that corn is probably predisposed to moving down to early April, at which point it should make a significant low in early April, and then from there the market has the capacity to take off from there. Right now, the area that we believe that support will probably come in is somewhere in the neighborhood of 367 to 370. If this market's able to come in and just gradually make its way down to about 370 near that April 5, April 6, or just early April timeline, and then if we can see some strength from there, that's potentially a really good position to be in, at which point we can see a nice move up into early June with minor pullbacks in the meantime. December corn shows a similar pattern where it found resistance up against 402.5. And similarly, right now, it's sitting up against support near 392.5. A downside potential support therefore rests at about 387. In the event it breaks there, then 382 3/4 is probably going to hold. But right now, we're looking at key support really living somewhere in the neighborhood of 386 to 387 for the December contract. Beans is moving very close to expectations. We have several key resistance points coming in at the same level here. One standard deviation above the point of control was at 1078. We had our 90-degree mark at 1079 3/4, or essentially 1080. We had volatility-based resistance coming in at this level also. And all of this pointed towards the market really having a zone where it was going to find, or at least meet, very strong resistance. From that time, the market is now poised to make a mirror move. Here we have the decline from December through January, where the market dropped. We got a pullback here. This next leg, if we get a mirror move, suggests that the market should move at a minimum to about 1024. In the event that it breaks down below 1024 and we get a series of closes below 1008, then in all likelihood, the market has a very good chance of testing this 988.5 number if it's not able to hold above 1008. And so we're now sitting at some critical levels for soybean, but as anticipated, we saw a pullback here, and this pullback actually happens to be a Fibonacci ratio of 78.6% of the initial range that it did drop from here. So we're looking at some very key levels that suggested that key resistance were going to come in, and this contract did not disappoint. We've also shared in the past about the significance of our timing angles. You can see across the top here how the market had very good resistance. Here we have our 1-by-1 angle. This is where the market really failed. And then we have our angle just below. And since the market was not able to hold this angle most recently, now we're looking at a move down to our next angle to the downside, which suggests that we could very well see a test of this angle just below at a minimum. We're very much liking the way in which this market has been trading very well inside of our timing angles. And right now, the last thing we want to take a look at is the potential for a short-term bounce, since we are approaching a time factor, which suggests that the market may move down for the next 2 or 3 days, get a small bounce near the 1035 number before it continues its way back down again. The November beans contract has a couple key levels as well we want to bring to your attention. Overhead resistance right now, we're looking at the what appears to be a lower double top near this 360-degree mark of 1027 3/4. The market now has touched potential support at 1011 3/4. In all likelihood, we're looking for a break for this market to move down and at least test this 995, 996 area on its way down with potential weakness. July wheat made its way up to resistance at our 270-degree mark near 483 3/4. And then it dropped from there, but continues to fight as it found great support at the 180-degree mark of 462. Today we see a nice move to the upside. Whether or not it's sustainable remains to be seen, but we do like the way it's able to bounce off of key support and resistance levels here. Previous support from some time ago was at the 90-degree mark at 440 3/4. And you can see how well the market really supported that level. We talked about the need for it to break above 462 in the past. That's exactly what happened before it is able to get some good energy on the way up. Up to the next levels where we saw the next key level of resistance at 473, at 483 3/4. And so if this market is once again able to get through this volatility-based resistance band, this band would then become great support, which would suggest that a move up to about 506 is probable. And so we'll continue to monitor to see how much strength this contract's able to garner. But for now, we are very pleased with the way in which it's been able to move off of the lows that we've talked about for the last couple months. The next important time horizon for the July wheat contract is on March 3rd, so we will be on alert to see how the market responds as it approaches this timeline. You will also notice here that we found very good support at that 462 number, which coincides with the last set of analyses that we saw. The December contract is similar in nature, where we have key resistance up at 519. The intermediate level was at 507 3/4, and now we're sitting at support at 469.5. You can also see that we have our sinusoidal support line coming in, which is where the market also found some support here as well. And in the event that the market breaks down, we have downside support at 485.5. And if he's able to break above and close above 508, then a retest of 519 is possible, with the possibility of reaching upwards towards 530. We've gone ahead and moved on to the June contract. And as you can see, the trading band that we've been sitting on, the market continues to trade inside of it. We had that marginal break we spoke of before when we looked at the March contract. And at this juncture, what we would anticipate here is if the market's able to break through with significance below about 53.5, this is perhaps going to be our key area for a potential sell, at which point we would not be surprised to see this market come in and make a test of about $50 and potentially more. Downside support lives potentially at 48 and change. This is at our 180-degree mark. And if the market's not able to survive this level, we could very well be looking at a move that makes it all the way down to about $45 near that 120-degree mark if the 49 level is not able to be held. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.